He got paid today, but something feels off. Why is the paycheck smaller than the salary he imagined? That question is where a lot of people begin with taxes. For beginners, taxes can look like a wall of forms, percentages, and weird words. That makes the whole system feel scarier than it really is. So let's make it simple. In the next 10 minutes, we're going to break the US tax system into small, easy pieces. No law school language, just the basics you actually need to understand. At the most basic level, taxes are money collected by governments to pay for public services. Think roads, schools, healthcare programs, and other things communities use. That's the big picture. In the US, taxes can come from 3 levels of government. There's federal, state, and local. That's why taxes can feel layered instead of simple. This video focuses mostly on personal income tax because that's the part most people run into first. It's the tax connected to what you earn, and it's usually the one behind paycheck confusion. First, start with gross income. That's the money you earn before certain tax adjustments and deductions are applied. It's the starting pile, not the final taxed number. You usually don't pay tax on every dollar of gross income. Some amounts get removed first through deductions or adjustments. What's left matters much more. Many taxpayers choose between the standard deduction and itemizing deductions. The standard deduction is a fixed amount. Itemizing means listing specific eligible expenses one by one. Your filing status also matters. Single, married filing jointly, married filing separately, and head of household can all lead to different tax brackets and deduction amounts, so 2 people with the same income may not pay exactly the same tax. Now, let's talk about the thing that confuses almost everyone: tax brackets. The US federal income tax system is progressive. That means higher layers of income are taxed at higher rates. But here's the key idea. Only the income inside a higher bracket gets that higher rate. You do not suddenly pay that higher rate on all your income. That myth causes a lot of unnecessary panic. Imagine someone with $50,000 of taxable income. The income gets taxed in layers, starting with the lowest bracket first. The next layer gets the next rate, and so on. Now imagine someone with $100,000 of taxable income. They still use the lower brackets first. Only the extra amount that reaches a higher bracket gets the higher rate. That's why your marginal tax rate and your effective tax rate are not the same thing. Your marginal rate is the rate on your top layer of income. Your effective rate is the average rate across all your taxable income. Most workers don't wait until tax day to pay everything. The US system is mostly pay as you go. That means taxes are taken out during the year as you earn money. When you start a job, you usually fill out Form W-4. That form helps your employer know how much federal income tax to withhold from your paycheck. It helps estimate the right amount throughout the year. This is why salary and paycheck are different numbers. Your gross pay may look big, but withholding happens before the money lands in your account. That's normal, not a mistake. If too much tax was withheld during the year, you may get a refund. A refund can feel great, but it usually means you paid in more than necessary ahead of time. If too little was withheld, you may owe more when you file. That can feel painful, but it doesn't always mean you did something wrong. It may just mean not enough was paid during the year.
Self-employed people often handle taxes differently. Since they usually don't have an employer withholding money for them, they may need to send estimated payments during the year. That helps prevent one huge bill later. Those estimated payments usually happen quarterly, so instead of one big yearly shock, tax gets spread across the year. It's the same pay-as-you-go idea, just handled more manually. You'll also hear about forms like W-2 and 1099. A W-2 usually means you were an employee with withholding. A 1099 usually means non-employee income, which often needs more self-managed tax planning. At the end of the year, you file a tax return, usually Form 1040 for individuals. This is where everything gets reconciled. You're basically comparing what should have happened with what already happened. So filing is like final math. How much income did you have, how much tax should you owe, and how much tax was already paid in through withholding or estimated payments. You may also hear the term AGI, which stands for Adjusted Gross Income. Think of it as a middle step between gross income and final taxable income. It matters because some tax rules are based on AGI. Some adjustments can lower income before taxable income is calculated. Depending on your situation, that might include things like certain retirement contributions or other allowed adjustments. This is one reason tax returns are more layered than people expect. A simple way to think about it is this. You start with income, subtract allowed deductions, and get taxable income. That taxable income is what the brackets apply to, not your entire life, not every dollar you touched. Now, let's separate two words people mix up all the time, deductions and credits. A deduction reduces the income that gets taxed. A credit reduces the actual tax bill itself. That's why credits can be especially powerful. They don't just shrink the pile being taxed, they can directly shrink what you owe dollar for dollar.
Some credits are tied to things like children, education, or income level. Not every person qualifies for every credit, but understanding they exist can change how you think about your final tax bill. Deductions can come from different places too. Some people use the standard deduction, while others itemize expenses like mortgage interest, charity, or certain medical costs if eligible. The goal is simple: legally reduce taxable income. Your paycheck may also include payroll taxes, which are different from federal income tax. This is another reason paycheck math feels confusing. More than one type of tax can be coming out at the same time. One major payroll tax is Social Security. For employees, a percentage comes out of wages, and the employer also pays a matching share. That money helps fund Social Security benefits. Another payroll tax is Medicare. It also has an employee share and an employer share. That money helps fund Medicare programs. If you're self-employed, you usually cover both the employee and employer side of Social Security and Medicare taxes yourself. That's why self-employment tax can feel surprisingly large. It combines both halves. Higher earners can also run into an additional Medicare tax on wages above certain levels. This doesn't apply to everyone, but it's one more example of how the tax system has layers. Not all income is taxed the same way. Investment profits, called capital gains, can follow different rules depending on how long you held the asset. Short-term and long-term gains are not treated the same. State income taxes can be very different too. Some states have their own income tax systems, and some states don't tax personal income at all, so where you live matters. Then there's sales tax. You feel that one right when you buy something. It's a reminder that taxes don't only show up on your paycheck or tax return.
Property tax is another big one for homeowners. Local governments often use it to fund nearby services and infrastructure. Even if you don't see it daily, it matters. Businesses deal with taxes too. Corporate taxes apply to company profits under separate rules. You don't need every detail today, just know the tax system is bigger than personal income tax. Some people may also hear about estate or inheritance taxes. These usually affect far fewer people than income or payroll taxes, so for most beginners, they're not the first thing to worry about. At this point, you can see why taxes feel messy. There are different tax types, different forms, and different levels of governments. The trick is learning the flow instead of memorizing everything at once. Here's one myth to kill right now. Moving into a higher bracket does not mean all your income gets taxed at that higher rate. Only the portion inside that bracket does. That's the heart of marginal tax brackets. Here's another myth. A refund is not bonus money from the government. In many cases, it's your own money coming back because too much was withheld. Nice to receive, but not really free. And one more important point. More time to file is not the same as more time to pay. An extension usually delays paperwork, not the tax itself. That's a detail many people learn the hard way. If taxes are filed late or paid late, penalties and interest can show up. That's why deadlines matter. Even simple planning can save stress and money. There's also a huge difference between tax avoidance and tax evasion. Avoidance means using legal rules like deductions and credits. Evasion means illegally hiding or misreporting income. One of the smartest habits is keeping records. Save pay stubs, tax forms, receipts, and important documents. Good records make tax time faster, easier, and less scary.
You should also revisit withholding when life changes. Marriage, a new child, a second job, or side income can change your tax picture. That's why updating a W-4 can matter. You don't have to do everything alone. Tax software can help with basic returns, and tax professionals can help with more complex situations. Using help is smart, not lazy. So, where does federal tax money go? A large share goes to things like Social Security, Medicare and health programs, national defense, and interest on government debt. Taxes are not just numbers on paper, they fund real systems. Federal spending is often grouped into mandatory and discretionary categories. Mandatory spending is required by existing law. Discretionary spending gets decided through the annual budget process. State and local taxes support nearby services too. Think schools, roads, police, fire departments, and local infrastructure. That's why taxes can feel abstract until you connect them to everyday life. The goal of learning taxes is not to become obsessed with forms. It's to make better decisions, avoid surprises, and use legal options wisely. Understanding a little can save a lot of stress. So let's recap the bracket idea one more time. The U.S. system taxes income in layers. Your top bracket is not the rate paid on every dollar. And the yearly flow is simple when you zoom out. You earn income, tax gets withheld or estimated during the year, then you file a return to settle the difference. That's the whole movie. Once you understand that flow, taxes stop feeling like random punishment. They become a system you can read, and that makes you a lot more confident with money. So no, taxes are not fun, but they do get easier when you understand the rules. Learn the basics, keep records, and don't panic when you hear words like bracket or withholding. If this helped, share it with someone who still thinks a higher tax bracket means all their money gets taxed more.
If this video made taxes finally click, hit like, subscribe, and share it with someone who still thinks moving into a higher tax bracket means losing money. And remember, this video is educational, not personal tax advice. So for your specific situation, always check the IRS or a qualified tax professional.